Okay, good morning everyone and welcome to this particular video. I would like to say Merry Christmas and Happy New Year in advance. Today is 23rd of December 2025, which is remarkable. Congratulations to making it to this particular point in time. Um, Congratulations and God bless you. I'm happy. With that, let's start this video. This video is a technical analysis of the ALPH/USDT token. Please pay attention to what I'll explain because it involves technicality. I would like to enumerate and emphasize that there are two types of analysts. We have the technical analyst and we have the fundamental analyst. Technical analysts are analysts that trade with charts, make analysis references with charts, tools, moving averages, exponential moving averages, Fibonacci retracement, trendline analysis, harmonic patterns. These are all tools we use to predict where the price will head to in the near or distant futures. Okay, so this is what technical analysts do around the clock. But fundamental analysts trade on the news. Okay, we'll look at the news, try to see what's happening in the news, and determine what's going to happen with the price in return. Okay, so if the fundamental analyst price erratic price movement plays into the trend of a technical analyst. So in my opinion, a technical analyst is much more superior. So now that I've given you an overview, an introduction of what a technical analyst and a fundamental analyst, what they are. So let's head into the video proper. This is a 1 hour time frame, and we can see each candle here represents 1 hour. So within the last 24 hours, we have an idea of what has happened in the market. We can see, let me blow it out, that we had an upward trend from 0.1020 to this particular point, and we have a resistance that has been built. Let me draw the line here. We have a resistance that has been built around this point. Good. Okay, that's the resistance at 0.1163. That's the resistance point. So what that means is that whenever the market rallies and breaks this resistance, we're going to have a new high. Okay, higher high. So many traders, like support and resistance traders, are watching around the clock to ensure that their price breaks this particular zone. They're anticipating and watching. Okay, so we can see here that we had what we have here is okay, let's just say we have a support that has been built here at 0.117. 0.1117. We have a support that has built there. So there's nothing really much happening within the 1 hour time frame. So let's head to the 4 hours time frame. In the 4 hours time frame, we have much more weight to each candle. Each candle represents 4 hours. Okay, you should head and note that each candle represents 4 hours. And we can see that we just had an upward trend trajectory from this point to this point. Is an upward trend, which is healthy. It shows a market reversal. That a market reversal is imminent. Okay, everybody has been anticipating this reversal. So this chart is also telling us that we can see that currently the price sits at 0.112, and we can see that what we have here has been okay. Surprisingly, we have a support that has been built here, and the market is retesting that point. Okay, so we had a downward trend, then we had this inverted hammer here, we had a confirmation, and then we had a bullish signal. Yes, we had a bearish candle here, which is an exact feature that happens when a news goes against the trend. We experience candles of this particular fashion, and then after the market settled from the erratic movement, we can see that the market continued maintaining and respecting the trend, the upward trend. So we had dojis 1, 2, 3, 4, 5, 6. Doji symbolizes an indecision in the market. So we had about 6 to 7 dojis before we had this little price decline at this particular point. So at this, I would like to pull out my Fibonacci retracement to see where the price can reverse in the longer distant future. So we'll do this. Okay, so you can see. Okay, so with Fibonacci, sorry about that. Okay, with the Fibonacci retracement, we're expecting the price to reverse to Okay, let's just have a general estimate. Yeah, this is fine. This is perfect. With Fibonacci retracement at 61.8%, we're expecting the price to reverse to about 0.123. Then at 78.6%, we're expecting the price to reverse to 0.1350. And at 100%, we're expecting the price to reverse to 0.1428. Okay, remember this is a 4 hours chart, so this is like a short-term price recovery strategy. Okay, so you can put your take profit at 0.16, which is here. So this particular point, you can put your take profit here. You can put another take profit at this particular point at 78.6%. Okay, because the market is going to retest this level. Okay, so there's something called high probabilistic trade. Um, so whenever the chart is going up, like what we analyzed here at 0.13, that's a high probabilistic trade. So when it gets there, you can take your profit at that point. When we zoom out, we can see what has happened. We have a very strong support at this point here. We have a strong support at this point, and the market will keep testing this support point. Okay, we have a support at 0.1253. A very strong support that has been built within this zone. Okay, and the market is going to test it before it breaks this resistance and rally around back to this resistance point. The market is going to test support. Let's take the candle up. Let's see what we have here. This is a strong resistance point we have at 0.14. Okay, that's a very critical point for us. So whenever I break 0.14, we expect the price to rally back to 0.2. So let's head to let's say the 12 hours chart. So in 12 hours chart, each candle represents 12 hours. So let's blow it up to see what has happened. We had within the last 12 hours, so in the 12 hours chart, 2 candles represent 1 day. So here we can look at this time. We can see we had a bullish engulfing pattern, okay, which can also be interpreted as a doji. What is a bullish engulfing pattern? We had a confirmation here, and the market rallied up to this particular point. We have a resistance at this point here. Okay, so we have that strong support is still showing up here. This particular point, we have a very strong support at this point, which is a 0.1279. Okay, the market will have to break this support point before the price can rally back to 0.14. Okay, so we can see that currently the price still sits at 0.112. The market is currently quiet. Okay, so you can see we had a downward trend and then a reversal, which is imminent. So this is a 12 hours chart. So if we pull out our Fibonacci retracement, it can give us an idea of where the price will reverse to in the near or distant future. Okay, so we have 61.8%. The price is going to reverse to 0.25 at 61.8%, and at 78.6, we're expecting 2.998, which is approximately, okay, we can say 0.2863. That's what we're expecting the price to reverse to. Okay, which is very remarkable. So this is a 12 hours chart. So we can see that the higher the time frame, the much more prediction Fibonacci retracement can give. Okay, so if you're a long-term trader, you can put your take profit at 61.8%, which is 0.25, or at 78.6%, which is 0.2863. You can put your take profit at these two significant zones, or even 100%, which is 0.3391, because it's not impossible. Okay, so our critical support point is 0.1008. So if you are trading, you can put your stop loss at 0.1000 or 0.095. Okay, remember these are just for educational purpose. It's not a financial advice, but we're just doing it for educational purpose. So make do with the information you have gotten from here. So let's head to the daily chart. The daily chart now, which is a standard chart used by banks, hedge institutions, name it. According in daily chart, we can see what has been happening. It's very clear now. You can see that the market has been hovering around this point. Let's just draw this strong support zone that we have here. Okay, can see a very strong support at 0.1243. So the market will continually test this point to see what is going to happen. Whenever the market can break this support, then we expect the price to rally to a new point. Okay. Okay. So again, we have so many futures here. In a daily chart, each candle represents one day. So today is currently Monday. So what we have is 1, 2, 3. So within the weekend, we had an inverted hammer here. And we had another inverted hammer here, which also symbolizes a bullish engulfing pattern. So we can see that the market is currently in a reversal zone. So the market is in an upward trajectory in the daily chart. Okay, it's not yet loud, but we're going to see it. But mind you that the market is going to test this support here at 0.1243 that we previously drew. And after that, once it breaks it, it's heading back to 0.14. And once it breaks it, we expect a new all-time high. Not all-time high, but it's going to test a new high point that we previously surpassed. Okay, so now let me blow the chart out and take a Fibonacci retracement before we go to a higher time frame, or basically call it a day. Let's take our upper point at 0.3717. Okay, just be patient, trying to draw the chart so we can get an accurate prediction. Take this here. Okay. Okay, so you can see that currently looking at this Fibonacci retracement at the 61.8%, we have 0.2688. Okay, that's what we're expecting the price to reverse to. Remember, this is a daily chart. At 78.6%, we're expecting the price to reverse to 0.3175. And at 100%, we're expecting the price to reverse to 0.3713. Okay? So if you're a long-term trader, you're a hedge institution or a bank, or you're trading for a financial institution, these are advices. These are zones you can can place your take profits. You can watch out for these zones. Okay? 61.8% is 0.2763. Please always remember that whenever you're trading, your lot size should be reasonable. Your lot size should be in proportion with the amount of equity you have, and your trading and management skills. Okay, it's very important. Your stop loss is also very important, and your um, leverage should be 1:5 or 1:1. Those are the two leverage I recommend. Okay, unless you are a seasoned and experienced trader, you can go above that, and it shouldn't even surpass 1:10. Okay, so that's it. And lastly, I would like to the taking the daily chart. Let me just take the weekly chart and we'll call it a day. In the weekly chart, each candle represents 1 week. We have about, where is it, 52 weeks in a year. So let me just draw out a Fibonacci retracement straight up. We're expecting the price to reverse to, let me look for a higher point. Okay. So we can take two Fibonacci's, one at 38499, which is our all-time high, and another one at 2.4. So let's take a Fibonacci at our all-time high to see what's going to happen. Okay. So at 78.6%, we have 3.1248. And then at 61.8%, we have 2.4770. At 50%, we have $2. And then at 100%, we have 3.9499. Okay. So let's draw it like this. At 100%, we have 3.8360. At 78.6%, we have $3. At 61.8%, we have 2.3630. Okay. Remember, this is a weekly chart. Okay. So if you are a long-term trader, okay, there are traders that trade, they leave their chart to run for years. Okay, these are guide zones where you can put your take profits. Okay, if you place your take profit at $3, the market is going to head back to that point because Fibonacci doesn't lie. When it heads there, it will be triggered, and you take profit. You make lots and lots of pips. with this strategy. Okay, so I'll head back to the daily chart. So let me blow it out. So we're expecting the price to rally back to test this support zone here. That's our near-term analysis. Okay, so if you are a trader, if you're a scalper, you watch your strategy. And then we have exponential moving averages and moving averages embedded on this chart. We can see we have the 5 moving average and the 30 moving average. We have the 5 exponential moving average and the 30 exponential moving averages crossing each other and symbolizing a price reversal. You can see how it crosses here at this point. You can also see how it crosses here at this point. And we can see how this is crossing here at this point. Very soon they will all turn, they will form a curve, and you see that the price will start reversing. We'll have our MACD below, and it shows the volume within the last 24 hours at this particular point. So with that, I will bring an end to this video. I hope you enjoyed it. Please feel free to ask any question if you have. I'll be glad to answer your questions in the comment section. Or you can head to our Alephium trading group and ask your questions. We have seasoned traders that will be there. They'll be ready to answer your questions around the clock, to put you through when you have any confusion or when you need any clarification. With that, thank you so much for watching this video. And stay blessed. Take care of yourself and have a great holidays, rest and enjoyment. Bye. Thank you.